This segment sponsored by Foster Financial. Well, as you know, today is Wealth Wednesday, and we are so excited to speak with Caleb Doan to see what financial advice he has for us today. Hi, Caleb.
Hi.
Welcome.
Thanks very much.
Yes. Okay, so we're going to dive straight in because today we're going to talk about CDs and annuities and all the interest rates that's involved because we love a good interest and a return on that investment. So give us an overview.
Yeah, absolutely. So I figured it was helpful to mention this because over the past couple weeks, we've seen an interest rate that we haven't seen in a really long time. And so I thought a lot of people would be interested in that. And that specifically is a 6% multi-year guaranteed annuity interest rate, or MYGA is kind of what these products are.
Okay.
And they act somewhat similar to CDs if people haven't heard of them before. So I always like to kind of compare and contrast how they work with CDs. But 6% is something that we haven't seen in a really long time. And so it's kind of eye-catching when you first see it and you kind of wonder, hey, is that a real thing?
Yeah, I was going to say, is that too good to be true? Like 6%. I mean, it's been a while since CDs have really had a lot to offer, I feel, especially because they have to be locked in for a minimum of 3 months, I believe. You can have like a 90-day, 3 months,
CDs,
something like that.
Yeah, you can typically get them in a lot of different maturities.
Yeah.
Usually banks will only offer them in certain increments.
Right.
And that's kind of one of the advantages of some of these MYGAs or multi-year guaranteed annuities is that you can get a far wider range of maturities than you can with CDs often.
Right.
But yeah, you're exactly right. If people's kind of alarm is going off, like, hey, that doesn't sound correct, it probably should go off because we haven't seen these in a really long time.
Right.
But if we look at how interest rates have gone up over the past, year and a half, we've seen a lot of the negative sides of that, where, mortgages just passed 7% for the first time in a really long time. And so you kind of get the negative side, but then you can also take advantage of the positive side where CDs and multi-year guaranteed annuities are yielding a lot more as well.
Okay, so what are the qualifications for a CD? Because does this only apply to a certain term of the CD at a certain bank with a certain amount that you're putting in? Those are the questions.
Great question. Yeah, right now CDs, for like a 1-year CD, let's say, a lot of banks are offering between 4.5% and maybe 5% on those. And those are usually for a 1 year.
Okay.
But if we think that interest rates are really high right now, a lot of times we want to lock it in for a longer period of time.
Right.
And that's where those MYGAs or multi-year guaranteed annuities come into play. One of the advantages that they have over CDs is that you can lock in that interest rate for a much longer period of time. And so specifically that 6% MYGA is over 10 years. And so you're able to get 6% every single year for a full 10 years. And so that's kind of how they're a little bit different from CDs. They're similar in that they just pay that fixed interest rate that's stated on them. They're a very conservative investment. And then the other kind of helpful thing about MYGAs is that with CDs, you have to pay taxes on the interest in the year that you get the interest. With MYGAs, on the other hand, they kind of stay in this annuity wrapper, I guess, if you will, over the course of the 10 years that you have it, let's say.
Right.
And you actually don't have to pay taxes on any of that interest until you go to withdraw it.
Okay.
And so that's another nice advantage. One sort of con between CDs and MYGAs is that CDs are sometimes a little bit more liquid, I would say. Typically if you get a 1-year CD, 9 months in, you tell the bank, hey, I really need my money back. They might dock you some interest or something like that, but usually you can get your principal back. Not in all cases, but sometimes. With the MYGAs, on the other hand, they have a surrender period. And so if you say, hey, I'm locking this in for 6% for 10 years, there's a surrender period of 10 years. And if you were to turn around in year 1 and say, hey, I want all my money back, they would actually charge you a surrender charge on that.
Okay, so it makes you more committed and kind of holds you accountable for keeping that money locked in.
Exactly.
To actually gain the benefits of the accrued interest. Okay, so what are the qualifiers for an annuity? Like, is that something that anyone could get?
Yeah, anyone can get into an annuity. If you are below the age of 59 and a half, you have to be a little bit careful because you can't pull money out of the annuity without getting a little bit of a penalty if you're under the age of 59 and a half. And so we have to be careful with that. But a lot of people have come to us maybe saying, hey, I saw my 401k drop and I got really worried. Maybe I sold when it had lost some money. How can I get some of that back?
Right.
And maybe they're really conservative investors. And so using something like this, if you put $100,000 in a 6% MYGA for 10 years, at the end of the 10 years, it's now $179,000 on a very conservative investment.
Say that again, roll that back.
Yeah, if you put in $100,000 year one to a MYGA and it earns 6% over 10 years with compound interest, that's $179,000 at the end of 10 years.
Wow, that is a good return on that investment.
Yeah, exactly.
Oh, because it's compounded. Because I was going to say that sounds like what, about 85% jump of the original principal?
Yeah, but yeah, compound in there. So you're getting interest on your interest each year, which is a really great feature.
See, this is why we need you, Caleb, to break down the numbers and help us with this math. Okay, that's so wonderful. Thank you so much for sharing about CDs and annuities today.
Yeah, sure thing.
Yes. And if you would like more information about Foster Financial, you can actually call them to get a complimentary consultation. We'll have their website and their phone number listed below, and we'll be right back. This segment sponsored by Foster Financial.